What is going on, YouTube Nation? This is Dark Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit notification bell so you don't miss future videos. So I looked at a website and somebody made a blog post about Blackrock Capital Investment Corporation. I'm not going to say the person's name. I think that would be disrespectful. I actually read a lot of articles from this individual that's a blogger. It's nobody that I actually have collaborated with or communicated with in the investing community. And I actually found some pretty good business development companies from this individual that makes posts. And to be honest with you, I do not want to call this person out or put them in their place. I'm not that type of person, but I really want to go over Blackrock Capital Investment Corporation to see if this one's a buy. And it was listed as one of the best BDCs. And I'm going to show you how I evaluate business development companies. I'm going to do a review on it, and I'll show you why it may or may not be a buy. So if you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. Smash that like button. Let's check this dividend stock out and cheap dividend stock out right now. So Blackrock Capital Investment Corp is sitting at 388. It's been down 37.12%. It's been a little stagnant, and it's really cheap. It really is cheap. It has a dividend yield of 10.31%, a PE ratio of 17.88, average volume 232.31K. The market cap is 281.58 million US dollars. Year range is 303 to 403. Day range is 386 to 394, and its previous close is 392. So the first thing I'm looking at is, okay, it says bonus points for a business development company. Remember, like I said, I'm going after the real estate sector, financial sector, and a lot of these business development companies. One, because their revenue's done very well. Two, because they haven't kept up with the S&P, and it's taking a while for them to keep up with the S&P. And three, there are really good business development companies. Hercules Capital, Ares Capital Corporation, Main Street Capital. I can go on. And with a lot of those dividend stocks and business development companies, I want to get to 400 shares. So I wanted to mix this up a little bit and show you this business development company and some things that maybe it's a buy, maybe it's not. I'll show you at the end of the video my conclusion, but let's look a little bit more. So it's struggling against the S&P, and it's really cheap. That's okay. That's one thing that it has going for it. Let's check out some more stuff. So it started since right around, what year was that? 2007. It was 1475. It took a huge nosedive. That looks like right when the recession really was in business. So it was 375, and it started coming back, and then it started going down a little bit, still a little bit down, still trying to make a comeback, still up and down, still up and down, still up and down, and now was at 247 since the pandemic hit. So the recession, it was right around 391. Pandemic hit, it's 251. So it's still going down, but it's fighting for its life. 360, 378, 350. So let's look a little bit more into them as a company. So Blackrock Capital Investment Corporation provides middle market companies with flexible financing solutions, including senior and junior secured, unsecured, subordinated debt securities and loans, and equity securities. Their strategy is to provide capital to meet current and future needs across the spectrum, creating long-term partnerships and growing middle market companies. So let's look a little bit more into them. So their portfolio by industry, it's heavy into software, diversified in financial services, internet software and services, diversified consumer services, professional services, healthcare technology, healthcare providers and services. So software, it's way up there. It looks like 28.4%. The portfolio by security type is senior secured first lien debt, and then which is 84.5%. And then senior secured second lien debt is right at 11.4%. Then unsecured debt, preferred equity, common equity. So again, with their diversification, construction, engineering, IT services, healthcare, technology, providers and services, diversified consumer services, professional services, internet and software, diversified software. That is attractive. So I want to see what's inside of it. When I look at business development companies, I want to know how they do that, how their debt is. Okay, so there's some positives. Okay, they're fighting for their life with the S&P. I mean, with the price per share. They're well diversified, but let's look at their revenue trends. So now jumping to their revenue trends, it has done terrible. So this is annually in millions US dollars. 2013, 131, 2014, 134, 2015, 129, 2016, 117, 2017, 97, 2018, I'm actually going slower to make sure I get these numbers right. 2018, 83, 2019, 78, 2020, 67. Okay, you can blame the pandemic for that going down. That can happen. Then in 2021, it's 46. And then in 2022, it's 57. So these revenue trends are not attractive at all. So again, I like cheap dividend stocks. I like strong portfolios. I look into companies. The one thing that was turning me off was the decrease in price per share. Why wasn't it up there? And I'll compare BKCC to another dividend stock that's a business development company. I'll go over revenue trends. I'll go over dividend history. I won't go over portfolio because that's a little too much. I don't want the video too long, but I'll just show you some good trends that are good. So let's jump to its dividend history. So remember, 90% of what they make with a business development company go back to investors. So I like high yield, high dividend growth stocks. Okay. Low yield, high dividend growth stocks. I like having that. And again, I'm starting to have some goals with 400 shares. I may, instead of just dollar cost averaging every month, just say, I'm going to get to 400 shares of ARC. I'm going to go to 400 shares of Hercules Capital. Then I'm going to go to 400 shares of Saratoga Investment Corp. Then I'm going to go to 400 shares of Regions Financial. I may just do that from now on. So I really want to turbocharge my dividend portfolio. I'm, having 20, 30 shares, that's great, but how am I going to get the snowball effect if I don't have shares? So I need, that's my thought process now. I got to pay off debt. So, I can just do lump sum and just do this with a dividend portfolio and then keep on going. And then hopefully the Yieldmax ETFs and the Defiance ETFs, hopefully, but I'm not going to rely on them, their passive income buys my dividend growth stocks. So I want stocks like ARC, which I'll show you in a second, but I want to jump to the dividend history of BKCC. So I'm going to start in 2010. It was 32 cents, and then 2011 it was 32 cents still. Then it dropped down to 26 cents. Okay, so 2012 it was 26 cents, 2013 26 cents, 2014 26 cents. Then in 2014 it was 21 cents. Still 21 cents in 2015, 2016 21 cents, 2017 it was at 18 cents. And it was stagnant at 18 cents until in 2019 it dropped down to 14 cents. And then in 2020 the pandemic hit, it's stuck at 10 cents and it has not improved its dividend. So according to Zacks, the payout ratio is 83%. The number of dividend increases in the last 5 years is 0. Dividend growth in 5 years is negative 9.80%. So it has a high dividend yield, but the distribution, if you bought one share, you made 40 cents. So you're seeing a decrease. That could scream potential for reverse stock split. That is a low price. There's a risk for a reverse stock split. Honestly, to be honest with you, this is just, of course, this is not financial advice. TSLY has more potential than BKCC. And TSLY is taking a beating, which I'll probably do another video on TSLY later tonight. But look, it's in damage control. It's been decreasing the whole time. So if you look at a good business development company, a cheap business development company, which I'll jump to, Ares Capital is sitting at 2052. Its dividend yield is 9.36%, a PE ratio of 8.91, average volume 3.80 million. The market cap is 11.68 billion US dollars. Year range is 1695 to 2062. Its day range is 2041 to 2060, and previous close is 2056. So right there, it's making a little bit of a comeback post-pandemic. It was in line with the S&P, which is pretty impressive. The past 5 years, it's been up 25.89%. So now we're going to jump to the revenue trends. So I'll start in 2013, annually in millions US dollars, $881. 2014, $989. 2015, $1,025. 2016, $1,012. A little bit down, that's fine. 2017, $1,760. 2018, $1,337. 2019, $1,528. 2020, $1,511. 2021, $1,820. And then in 2022, $2,096. So that is an increase in revenue. So increase in revenue is always nice with big business development companies. Now let's see the dividend history. So I'm going to start in 2012 with Ares. It was 38 cents. Little stagnant. Remember, its revenue hasn't jumped up that much. It started making a comeback. So then in 2018, it was 39 cents. I'm sorry, 42. 2018, it went from 38 cents to 39 cents. So a few years it was stagnant. 2019, it went to 42 cents. 2020, a little bit of a cut. That's the pandemic. You're going to see that happen. Then in 2021, 41 cents. 2022, 45 cents. And then in 2022, you got a 51 cent right there. And then it's at 48 cents. So the dividend growth in 5 years is 4.62%. Number of dividend increases in the last 5 years is 5. Payout ratio is 81%. That's going to be high. It's a business development company. Again, the dividend growth in 5 years, 4.62%. So if you bought one share, you made $1.92 with a 9.34% dividend yield. So understand when you study business development companies and cheap dividend stocks, specifically business development companies, that some of the tips that I gave you are what I do to buy business development companies, what I find attractive with business development companies, the potential with business development companies. I like seeing trends versus having a feeling it's going to make a comeback. That's what I do with trends. Revenue, price per share, okay? Revenue, price per share, dividend growth, what's inside the portfolio. That's the way I look at buying business development companies. And I own a lot of business development companies, and I feel pretty confident with them. I'm long in Ares Capital, and there's no way I'm buying BKCC. So let me know what you think in the comment section. Is ARC a better one, or BKCC? Is it one of the top dividends? Or would you say BKCC is one of the top business development companies to buy? So if you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. I will have a video for you tomorrow. So take care and have a good one. And I'm going to jump to my disclaimer. As a reminder, this is a disclaimer. Do not use this YouTube channel for any form of financial advice. I am not a financial advisor, and this is strictly for entertainment purposes only with this YouTube channel. I said that twice. It is best to seek financial advice from a financial advisor or somebody certified to give financial advice. Do not use this YouTube channel for any form of tax advice. This is not used for any form of tax advice. Speak with a tax advisor as well. I own shares in Ares Capital Corporation. If something drastically happens, I'll sell them, but I have no reason to sell Ares Capital Corporation. I like high yield dividend stocks. I'm very transparent with my dividend investing journey, and this is strictly for you guys for entertainment, and I show you everything. So, and my thought process and my dividend portfolios. So just go speak to a financial advisor if you have questions. Take care and have a good one.